Hello and welcome. You're watching the Mining Show, brought to you by Blytheweigh on Core Finance. I'm Charlie Gibson. As they say at about this sort of time of year, remember the 5th of November. There are a couple of reasons you might do that. One is the obvious reason, and the other reason is because it's the day before CAML, and I will come to them very shortly, closed their deal whereby they bought Links Resources, a mining company, a mining operation in Macedonia. CAML, I should probably call it Central Asia Metals, to give it its proper name, is very notable amongst the UK market in that it has been one of the spectacular success stories of the sector. And to give you a little flavour of that, the shares in the last 2 years have doubled from roughly 125 to 250. It's a company that's paying taxes, it's paying dividends, it's doing everything, and it's doing everything in a part of the world that the rest of the market thought was a pretty difficult place. Well, joining me to explain the secret of their success and what they're going to do with their new project is the Executive Chairman, Nick Clark. Nick, thank you very much indeed for joining us.
Thank you.
So tell me, you've just closed the Links deal. It is a little bit different, isn't it, in that it's in Macedonia, whereas your major asset is in Kazakhstan. It's lead zinc, it's a base metal mine, whereas Kounrad is a copper mine. So tell us how you see this from a strategic perspective.
Well, Central Asia Metals, we listed in 2010 and we raised $60 million and we built our Kounrad project in Kazakhstan to produce copper. It started production in 2012. Since that time to the middle of this year, we've produced over 60,000 tons of copper cathode, and we've done it very cost effectively, very cheap. We're in the lowest portion of the cash cost curve, and we are one of the cheapest producers on the planet in terms of production costs at the C1 level. So that's enabled us to pay dividends. We paid back over $105 million back to shareholders since we listed. And we've got a very good following in the fund managers and the institutions like what we do. Now, we've been looking for something else to build on our success at Kounrad. We spent the last 2-3 years looking at a number of projects worldwide, predominantly copper in the initial phases. But when we found that there was a paucity of good copper assets with operating costs in the lowest quartile of the cash cost curve, we started to look wider in terms of geography. We looked in South America and Africa, but then we started to look at other commodities because we couldn't find anything that we thought fitted our philosophy. And that's when we identified the Sasa mine in Macedonia. It is an underground mine, so it's out, some people would say outside of our comfort zone, but it is a cash positive, well-run operation, 20 years mine life, and operating again in the lowest quartile of the cash cost curve. So it complements and adds significantly to our EBITDA margin, to our EBITDA quantum on a per annum basis. So that means we can maintain our dividend and in fact hopefully enhance it as the metal prices rise.
So how will it make your profits in the future, whichever profits you, EBITDA, whatever profits you want to look at, how will it look in future in terms of the split between lead, zinc and copper? Will you be in future, will you be a lead zinc company, or will you still be a copper company, or will you be 50-50-ish?
Well, obviously it's dependent on the C1 and C1 cash cost and where the prices go. Currently, on the modelling we have now, it's the EBITDA is slightly higher in the acquired asset in Sasa than it is in Kounrad, but the margin in percentage terms is higher in Kounrad than it is at Sasa. But look, going forward, we're now got a basket of commodities. We've got copper, which is doing well at the moment. We all know that, and the projections are very positive for the years ahead. Equally, lead and zinc, who have been laggards in the sort of commodity space over the last few years, is seeing a resurgence now. And there's a lot of information out there saying that lead and zinc together are going to be a very strong metals going forward for the next 2 to 3 years at least.
So does this make you, to summarise, would it be fair to say this makes you a diversified base metals company?
Well, inevitably it does. I don't think there's any other opportunities on AIM to invest in a company which has direct access to copper, lead and zinc in the quantums we're talking about. I mean, just to put it around numbers on it, we produce around about 14,000 tonnes of copper cathode per annum. The new acquisition produces up to 22,000 tonnes of zinc in concentrate and 29,000 tonnes of lead in concentrate. And interestingly, with the price rises as they are, that that zinc and that lead, they have equal weight in terms of revenue into the company. So we're a really nicely balanced company now, I feel. And of course, the added bonus is the geographic spread of risk from Kazakhstan to the Balkans region. And obviously, Macedonia is little known about, but a very passive country that actually found its independence in the early 90s from the former Yugoslavia, totally peacefully, unlike other areas of the Baltics. Sorry, the Balkans.
And you're happy with the political situation in Macedonia at the moment? Because the government, there was a general election, I think, earlier this year. Am I right in thinking there was a bit of an impasse between the various parties?
There was an election at the end of last year, actually, when the sitting centre-right party actually won more votes, but didn't get enough seats to form a government, and they couldn't form a coalition. And after about 5 months, the president of the country asked the current prime minister, who was the leader of the centre-left party, if he could form a government, in which he went and formed a coalition with an Albanian political party in country. So now they have the most seats, and they formed a government. They've been there now since May, June of this year. They seem to be very friendly to foreign direct investment. And in fact, I met with the deputy prime minister just the other week to introduce ourselves into the country, and we were welcomed very expansively and said, look, that we are exactly the type of company they'd like to see come into their country and running their major assets. But with the idea that we look after the stakeholders, the employees, health and safety, and also pay our taxes.
You paid $400 million for the new asset?
Absolutely, yep.
Which is not small change. How did you come upon that valuation?
Well, right from the outset, we used JP Morgan as our financial advisors, and of course we have Peel Hunt as our nomad and broker, backed up with Mirabeau. So we've got a really strong financial team based in London here, providing advice to us. Now, obviously, how do you end up with a valuation? You look at all the pluses and the minuses. We did detailed due diligence using well-respected consultants based in the UK here. We looked at all the numbers. We then looked at the financial reporting standards through one of the big four accountancy firms. We then did the modelling with JP Morgan, and we came up with a range of valuations. Now, it's never just a number based on an MPV, but it's looking at comparables. It's looking at multiples of EBITDA. It's looking at MPV numbers. And by that methodology, we arrived at a range that we were comfortable to pay.
Go on.
Well, I was going to say that 402 in some quarters might be deemed a high number, but in terms of multiples of EBITDA, it is actually less than current trading stats for some of the other metals companies out there. And for us, we viewed, having spent 2 or 3 years looking for the right asset to add into our portfolio, we needed something that's going to add value from day one to the company. There are lots of projects out there we could go and build, and we'd have to raise money and take the technical risk of building a project and then getting it into cash flow. This, from day one, is accretive on free cash flow, on EBITDA, and it adds value to the company from day one. And it will help us to enhance the dividend payment next year, hopefully if the metal prices stay up. Because we've taken a bit of debt on, so we haven't diluted the shares by issuing $402 million worth of shares. We've taken some debt onto the balance sheet, which we've never had before, and now we provide that leverage to enable us to, on a per share basis, I think seriously enhance the value of the company.
So when all was done, it was about 50-50 debt equity?
Absolutely. We, about 3 weeks ago, myself and my colleagues in the company, we went out on the road and we marketed the company for 3.5 days to our existing shareholders and some new, and we were absolutely overwhelmed by the response from our existing shareholders. We raised for the company over $150 million of new equity in a market which a lot of people say is very difficult to raise money. It just shows if you do what you do well, you reward your shareholders with dividends, as we have done for the last 5 years. When you go back to them with a good project and ask them for equity to support your project, to purchase a project, they will support you. So we had that. We then had our off-takers, Traxys, who we've worked with for 5 years at Kunrad as they market our copper cathode product. We went to them and they provided guarantee for a $120 million debt facility against our Kunrad asset. So all in all, we've had support from our off-takers, we've had support from our shareholders, and that's enabled us to put together a financial package which I think seriously enhances the value of this company.
So at the end of the day, what does that leave you in terms of gearing or financial gearing or leverage? How does your balance sheet look?
Our net debt will be around about $165 million post the deal.
And your equity? Roughly?
In the company?
Yes.
Well, it was last time we published it was about $40 million in the company, right. But some of that is paid for will pay down some of the transaction costs. But I think the important thing is the net debt to equity ratio, which is a figure that a lot of people look at, will be about 1.6, 1.65, and we pay down with the cash flows that are thrown out from the company. That gets paid down very quickly, so the net debt ratio drops significantly over the next 2 to 3 years. But I think it's important that we also have messaged out to our shareholders that whilst previously our dividend policy was based around paying back to shareholders a minimum 20% of our gross revenue, patently that policy cannot continue with another asset in Macedonia like this one, with a different cost structure. So what we've done is we've said that from the beginning of next year, January 2018, we will pay back to shareholders between 30 and 50% of free cash flow after operating expenses and capital expenditure. And that range, 30 to 50%, will ensure that the dividend on a per share basis, even for the expanded group, will be pretty much similar. And with the price rises and the sustaining prices we see, we would expect an increase on a per share basis.
Just a final question. Central Asia Metals, no longer just Asia. Do you need to change your name?
Well, it is something in the company we've been considering. Yeah, I mean, it's something we'll look at in the next year, I suspect. However, Central Asia Metals, I think, is a good name. It has a good standing in the investment community, and I'd hate to see that lost by a name change just because it's felt that it should happen. But who knows? We'll see.
I'm not going to ask you this question because I know you've been looking for a long time for a transformative deal, and I'm sure you'll be asked it very soon by someone in the market, and they'll be saying, what's the next deal? But that's unfair because you just closed the last one. Unless, of course, you want to answer me.
Well, I wouldn't mind answering that because I do know that has been a question, and we all know in the business, but success begets success. And since the deal has been announced, we have had a number of people and banks send us base metal opportunities. Would you be interested in this? Would you be interested in that? But I think I want to not allay fears, but reassure people and investors, the major institutional investors. Our task is to integrate 700 people working on an underground mine in Macedonia. It has a 20-year mine life. We've got to be pretty certain that we get things right, so financially nothing falls between the floorboards, as it were. So let's get that right. 6, 9 months, if it takes a year to make sure that we're fully happy with things, then we may start looking at other opportunities. But I think 6 months, we're not going to be doing much, but just working hard to make sure everything comes together.
Do you think, sorry, I'm going to follow this up now, do you think the next deal will come faster than, if you like, your first deal? You had Kunrad, it then took you years to buy the Macedonian asset.
We're getting into a sort of philosophical argument here now. One of the things that this deal has done for us is taken from a single commodity, single asset, single country into a much broader range. I've already seen the daily volumes on our stock have increased significantly. The market cap of the company will increase, and we're approaching in dollar terms $600 million market cap. All of a sudden we're a much larger entity. So when something comes along, I think with bigger numbers attached to it, we do have the firepower. As long as the banks support us and as long as the institutional fund managers support us, I think we will have the firepower, far greater, being a bigger company and a strong stock price.
Excellent. Nick, we will look forward to that. Thank you very much. I'm afraid that's all we've got time for. Ladies and gentlemen, that was Nick Clark, the Executive Chairman of Central Asia Metals. As I say, one of the spectacular success stories of the London market over the last few years, and now diversifying from Kazakhstan into Macedonia, and who knows where yet. I'm afraid that's all we got time for, but join me, Charlie Gibson, on the Mining Show, brought to you by Blytheweigh on Core Finance. Join me next week, and we'll be looking for more companies whose share prices have, well, let's say, haven't done too badly if you've doubled your share price in the last couple of years. I'm afraid that's all we got time for, but until next week, you have a capital day.